Hey everybody, we're going to talk about some stocks that my buddy Jon Quast of thefool.com, he's one of my favorite guys to do videos with, some stocks he recently sold and why. We all sell stocks for different reasons, some good, some bad. We want to dive into that. Before we do, check out the link you see on your screen, fool.com/Frankel. It's a message from our sponsor, The Motley Fool. It's the best way to support this work we're doing on YouTube. Again, fool.com/Frankel. So Jon recently sold some stocks. We all sell stocks, some for good reasons. It's never a good reason to sell a stock just because the price went down or just because the price went up. But there are a bunch of different reasons to sell stocks, even if you still kind of like their businesses. So two stocks that Jon recently sold are Axon Enterprises and United Rentals. Axon's a stock I hear a lot. I hear that mentioned a lot among my Fool.com colleagues. I know it's been a very successful business. Jon, can you quickly run through what Axon does, first of all, for those who aren't familiar with the brand name, because their main product brand name is not Axon, and why you got rid of it?
Yeah, thanks, Matt. With Axon Enterprise, the bread and butter business, if you will, is a law enforcement technology company providing the non-lethal taser devices, the Axon body cameras, and also cloud services for the body camera footage or other police records as well. They do have software that makes jobs easier for law enforcement officers. There are some new verticals that they're getting into, but the bread and butter business is this law enforcement. And tremendous staying power. Basically, when a law enforcement agency decides to go with Axon, they have very large incentive to stay with Axon. And it's what we call high switching cost. So yes, they could switch to another system, they could switch to another company, but it's going to be a very big hassle because so much of what they already have is in the Axon system, especially with the cloud services, all that footage is being stored, all that data. And so they have incentive to stay with the company. And also, this is something that is just making law enforcement better. It provides accountability for law enforcement officers. It also provides protection for law enforcement officers. We have a record of what happened with the body cameras. And so these agencies have incentive to, if they haven't adopted it yet, to adopt it. So the growth has been fantastic. The retention has been fantastic. So there's a lot to like with Axon. And then the application of their various technologies into new verticals is also very intriguing. International expansion and also another opportunity for long-term growth, and it is happening. I sold this for a valuation reason, Matt, and I know that valuation and price a little bit different, right? And we don't want to be so focused on the valuation metric number that we miss the forest for the trees. And it's something that we talk a lot about. Focus on the business, not the valuation. At the same time, valuation is important. You look at various things, and I'm going to quote Benjamin Graham here. I know that we don't normally quote Benjamin Graham, but he says, the intelligent investor is a realist who buys from pessimists and sells to optimists. And with my companies here, I do have a valuation in mind that I think is normal, one that I think is extremely overvalued, and then one above that where I would sell. So it's not like I'm just selling, it should be at 15 times earnings, and once it gets to 16, I'm out. It's not like that. It's, man, if it gets to this price, that would be what I consider extremely overvalued. And I'm going to sell 20% beyond that. And so Axon got there for me. I really feel like for Axon, its normal price to sales ratio, you take it back 10 years, trades at about 8 times its sales. That's kind of a pricey valuation, right? It was trading at 10, and that's what I consider expensive, and I sold at 12 times its sales. Now, we're going to talk about United Rentals in a second. That's also a valuation-based decision. Why did I make this decision? It's continued to go up. It's trading at almost 16 times sales now. So I did not time the top, and I'm okay with that. I'm okay with that.
You never will.
Never will. And if you try to, see, if that's your goal, you're going to be disappointed. You're going to make a lot of bad investing decisions. That's not my goal. I know that it can go up more. I know it can get more expensive. But if it was my second largest position and I thought that it was extremely overvalued, if it corrects to what I believe is a fair valuation, I'm not going to be able to live with the fact that I thought I was extremely overvalued and I didn't sell. If it continues to go up, but I think it's overvalued, I'm okay with it. I can live with that.
You're
But I
fine
can't
letting
live with
other
the
people
other.
be irrational.
Right. There was a lot of stocks during the COVID boom that I felt in my portfolio were extremely overvalued and I wanted to sell, but I chose not to and watch them crash, 50, 60%. That's a hard pill to swallow when your rational self said it's time to go ahead and part ways.
You brought up something that's really interesting and that all investors should understand as is that price and valuation are two different things. It's
Yeah.
entirely it's entirely possible, and it happens. It's happened in my portfolio many times. I'm sure it's happened in yours, where a stock doubles and still looks cheap.
Yeah.
That's a thing. I mean, it happens all the time. But valuation can be a good reason to sell if you, like you said, you're not trading in and out of it. You're not trying to pin that 8 times sales, and if it goes to 8.5, then you're going to sell, and if it goes to 7.5, you're going to buy. You're not trading in and out like that. It's an extreme valuation jump that you say, okay, this isn't really justified, and now I want to get out. Um,
Yeah, and I think I invested at like 5 or 6 times its sales, right? So I've not only seen this tremendous business growth over the years and enjoyed that run up, but I've also seen this valuation balloon up. And I
and
benefit from it, but I'm not going to make that a part of my investing thesis that
so
we continue to get this multiple expansion.
you know both of these businesses a lot better than I do. I think it's fair to say that they're relatively mature businesses. In other words, you're not selling a 100 bagger too early here. Like there's not, I don't want to say limited upside potential, but this isn't like you're going to accidentally sell Tesla in 2014 like I did. Um, you're
That's a
not.
good point, Matt.
So they're
The younger the business, I think that the even less that the valuation should play into your decision making. I own stocks in my portfolio that are far more expensive than these two. But you do see the potential of that business growing far beyond what makes the valuation even relevant. Whereas in a more mature business, it does play a higher decision, it plays in higher to your decision making process.
like
And even
I
more so with United Rentals, if we want to transition to that.
yeah, like, I've done valuation based sales, and like you said, it's always the companies that are not mature or like there's still a lot of growth potential there, but they're not going to be 100 baggers over the next decade, and you're going to miss out or anything like that. It's sales that, like you said, if they go up a little more, you can live with it, um, and deal with it. That so. United Rentals, we'll cover that one real quickly. There are a lot of parallels between the two, especially in the reasons why you sold. Um, United Rentals, I think the name kind of tells the story more than Axon, but give us just a quick overview of it.
Absolutely. And so United Rentals is exactly what they sound like. They have rentals for many, machinery, equipment, stuff like that. If you need a scissor lift, chances are there's going to be a United Rentals close to you that you can rent one of those from. And so really cool business in the fact that they're the market share leader for North America, but still not a huge market share. This is a really fragmented industry. And they have a really solid management team that is just, man, they're all about the numbers. They're about what makes sense. They buy machinery new, they maintain that machinery, they rent it out. But when it's no longer cost effective and they get good prices for selling the used equipment, they'll take that. And so just really smart use of resources, and they generate tons of free cash flow. It's a real free cash flow machine, and they'll acquire other businesses in the space. Like I said, highly fragmented. They'll buy another business. And what I love about this is if you're a tech company, right, you're paying 50 times sales to acquire a small business, right? No, you're paying like 5 to 10 times earnings in the equipment rental space if you're going to acquire a smaller player. And so it doesn't it's something that really pays for itself. There's a good payback period when you use these, when you make these acquisitions in this space. And so they've just been growing and growing and growing those profits for many, many years. It's one of the greatest performing stocks over the last 15 years, up there with with your Microsofts and things like that. You wouldn't expect it, but it's unbelievable. Now, I did sell this stock as well. And I sold it for valuation, and that looks ridiculous because this stock, it currently trades at around 19 times earnings. Not 19 times sales, 19 times earnings. Now, why is that an extreme valuation for me? Well, because this stock is normally a 10 times earning stock. It's just not a very expensive stock. And for obvious reasons, there's not a whole lot of growth here. As far as top line growth, it's not a company that's going to attract a lot of investor attention. So it trades at a lower valuation. To see that all of a sudden go from what is normal a 10 to 12, and I felt like 16. That was what I said a long time ago. If it gets to 16 times earnings, that is just very unusual for this stock. That would be a point in which I sell. And it jumped there. It's continued to climb up to 19 times earnings, like I said, since I sold at 16 times. But, you know, again, third largest position in my portfolio. So if it continues to climb after I sell to a point that I still feel is pretty irrational based on the history, I can live with that. But if it pulls back from 16 down to 8 and I lose 50% of my value, that's a really hard pill for me to swallow, especially when you look at their outlook for the year. So their outlook for the year, not really expecting a big jump in profits. Profits pretty stagnant over the next year. Then you have uncertainty. A lot of their boom in recent years was due to infrastructure spending, right? The government invested tons of money. What does the election have in store? What is going to be the political environment 1 year from now? Don't really know. So stagnant earnings, uncertainty with the political environment at a valuation that I consider extreme for this company. So I sold.
No, you're giving some really good lessons here. That's, it's are you going to time it right? No, absolutely not. You're almost never going to time a stock sale or a purchase right, for that matter, regardless of why you sell. During the meme stock craze, it was really impossible to time everything. We all learned that lesson very, very well. Things can go lower, things can go higher. But at the end of the day, you have to kind of base your decisions on your analysis. And that's what you did. And I applaud both sales, even though, right, like you said, temporarily, it looks like, Jason Hall has been on my show, on these shows with us before, and he has a great line. You have to be willing to look stupid in the short run as an investor in order to look smart in the long run. And I really love that. There have been sales that made me look really stupid in the short run that turned out to be the perfect calls. So thanks for joining me on that, and we will see you next time. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment, so I'm proud to partner with The Motley Fool to bring you 10 stock picks from their popular product, Stock Advisor. Stock Advisor has beaten the market by more than 4 times, so go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 650% as of April 16th, 2024, and are measured against the S&P 500 returns of 148% as of April 16th, 2024.